How does a Hollywood blockbuster secretly act as a massive tax shelter for the ultra-rich? Disney bundles 30 films together, sells future revenue shares to billionaires for $500 million upfront, and the investors actually want the films to flop.
Wait, they want movies to fail? That makes zero sense.
Here's the twist: even when films make $1 billion, Hollywood accounting reports them as losses. Those paper losses become massive tax write-offs.
So they're trading real tax dollars for fake movie losses?
Exactly. A billionaire invests $100 million in a slate, but writes off the entire $100 million against income from their hedge fund or real estate empire.
But don't they lose their investment if the movies actually fail?
Here's where it gets insane: they only receive 15–20% of box office revenue anyway. Therefore, the tax deduction is often worth more than any potential profit from successful films. Meanwhile, the studio gets $500 million in cash up front with zero financial risk. They transfer all the risk to investors while keeping creative control and the majority of profits.
And this sounds like legal money laundering.
It's perfectly legal. Studios create elaborate distribution fees and accounting structures. Even Harry Potter films were reported as losses on paper. Investors offset millions in taxes from other income sources.
So studios make movies risk-free, and billionaires turn tax obligations into Hollywood lottery tickets?
Precisely. But here's the kicker: studios can now greenlight risky projects they'd never fund themselves. That experimental $200 million sci-fi film? Investor money. Zero studio risk.
How does someone actually access these slate deals?
You need $50 million minimum investment to enter these private partnerships. Wealth management firms like Merrill Lynch structure the deals. You're buying into production companies, not individual films. The key is finding deals with major studios: Disney, Warner Bros., Universal. Smaller studios don't have the accounting infrastructure to maximize tax benefits.
What's the actual math on return?
If you're in the 37% tax bracket, a $100 million investment saves you $37 million in taxes immediately. Even if films totally flop, you're only down $63 million real money. Any box office success is pure upside. It's the only investment where losing money is the real jackpot, and Hollywood wrote the rules to make sure everyone loses on paper.